Paramount just bought Warner Bros. Discovery for $170 billion.
Which is either the boldest media move in a decade or the most expensive panic purchase in Hollywood history.
Netflix got outbid. Let that sink in.
Okay, but Paramount winning feels like the kid who can't afford lunch somehow buying the cafeteria.
That's exactly my problem with this. The valuation is eye-watering, and the integration risk is massive.
The content library alone justifies half of it?
Half. Not all of it. We're going to dig into the math. The rundown.
Okay, 5 deals, rapid fire, let's go. Servier buying day 1, Biopharmaceuticals, $21.50 a share, $2.5 billion total.
Rare oncology premium. That price makes sense when you think about how thin the pipeline is for pediatric cancers specifically. Servier knows what they're buying.
Agreed. Clean deal, clear rationale. Next, Nuveen eating Schroders for $13.5 billion.
$13.5 billion to manage $2.5 trillion in assets. Do the math on that fee pool.
I did the math. It's a very good math.
It's obscene math, Nate.
Moving on. Banco Santander, Webster Financial, $12.2 billion. Santander planting a bigger U.S. flag.
Webster is solid regional infrastructure. This isn't flashy, but it's smart. Rate stability is making these long-range valuation models actually work right now. EY's been saying that for months.
Right, it's not rate cuts unlocking deals, it's predictability. Buyers can finally model without guessing.
Exactly. Okay, Devon and Katera.
$58 billion. $1 billion in projected annual synergies by 2027. Headquarters moving to Houston, obviously.
It's always Houston.
It is always Houston. Look, energy consolidation has its own gravity at this point. 2 big independents, overlapping acreage, redundant G&A.
The synergy math works. I'll allow it.
You'll allow it, high praise, and then AstraZeneca quietly acquires an AI startup called Modella AI, and everyone just sort of nods along like, this is normal now.
No disclosed price, which is either too small to matter or too embarrassing to say.
Banker translation, it was a talent acquisition dressed up as a deal announcement.
That's generous. I'd call it a press release with a capitalization table attached.
Fair. You know what ties all of this together, though? PwC flagged it. Megadeals over $1 billion have more than doubled year over year. 22 in the first 2 months of 2026 versus 14 last year.
While total deal volume is actually down 22%.
K-shaped market. Scale wins, everyone else waits.
Which brings us to the deal that makes all of these look small. Paramount, Warner, $170 billion.
Oh, we are absolutely spending the next 20 minutes on that one. The big one. $170 billion. I need a moment.
Take your moment. I'll wait.
Okay, I'm back. Paramount buys Warner Bros. Discovery. 2 of the most debt-laden, restructuring-obsessed, content-hemorrhaging companies in Hollywood just decided the answer to their problems is each other.
That's one way to put it. Here's another way. This is the biggest media deal in history, and markets are already side-eyeing it hard.
Mixed reactions is a generous description. I've seen warmer receptions at a root canal.
The valuation is genuinely staggering. And look, the content library argument makes sense on paper. You're talking about DC, CNN, Paramount Pictures, MTV, HBO, Yellowstone, the whole thing. That's a legitimate moat.
It's a massive moat. The question is whether you're buying a moat or buying a mortgage.
Both. You're buying both. Warner came into this already carrying a brutal debt load from the Discovery merger, and now Paramount is layering $170 billion on top of everything.
So the bull case is scale. You need scale to compete with Netflix. You need scale to negotiate with distributors. You need scale to...
And Netflix tried to buy Warner first. That's the part I can't stop thinking about.
Right, Netflix bids, gets outbid by Paramount, and now everyone's asking, did Paramount overpay just to block a streaming competitor?
That's not a merger rationale. That's spite with a balance sheet.
Okay, but is it though? If Netflix gets Warner's library, what does that do to Paramount Plus overnight? It guts it. So from a defensive standpoint, paying a premium to prevent that isn't irrational.
It might not be irrational, but irrational and expensive can look identical from the outside.
Fair, I'll give you that.
The integration risk here is also not nothing. These are two enormous bureaucracies with overlapping streaming platforms, overlapping sports rights, overlapping everything.
Two cultures that have each spent the last 3 years in various states of internal chaos.
And now they're supposed to merge smoothly, while antitrust regulators are staring directly at a $170 billion media combination.
The regulatory timeline alone could take 2 years. A lot changes in 2 years.
A lot can go wrong in 2 years.
You know what, though? I actually respect the ambition. Even if it blows up spectacularly, someone at Paramount looked at the streaming wars and said, "We can't play small anymore."
I respect the ambition. I'm reserving judgment on the execution.
That's the most Maya sentence you've ever said.
Speaking of execution, the energy sector had a moment this week too. Devon and Coterra, $58 billion.
Yeah, and somehow that feels almost quaint right now. Voices. So PwC is calling this a K-shaped M&A market. And honestly, that framing is doing a lot of heavy lifting right now.
It's accurate though. 22 mega deals in the first 2 months of the year versus 14 in the same window last year. That's more than doubled. And yet total deal volume is down 22%.
Right, so the big guys are feasting and everyone else is just watching from the parking lot.
EY has this line I keep thinking about. They're saying rate stability is the real unlock, not rate cuts. Which, yes, if you can model your debt costs with any confidence, you can actually build a DCF that doesn't fall apart in month 3.
See, and I half agree with that. But it also sounds a little like telling someone the weather's finally predictable enough to go outside while there's still a foot of snow on the ground.
That's a terrible analogy.
It's a great analogy.
It's really not. My issue with the EY framing is that it implies there's this massive backlog just waiting to release. And sure, maybe. But if the backlog is full of Paramount Warner size swings, $170 billion, Nate, then unleash might be the wrong word. Detonate feels closer.
Oh, detonate is generous. Netflix reportedly bid and lost, which means Paramount either really wanted that content library or really didn't want Netflix to have it.
Probably both. And that's the thing. When strategic desperation meets easy credit modeling, you get mega deals that look bold and might just be expensive.
Which is a perfect setup for what we're about to get into, because the Paramount numbers are genuinely something else. Spill the tea. Okay, so Lonza, tell me you saw the Lonza structure.
The capsules division thing, selling to Lone Star but keeping 40%.
Keeping 40%. They're basically saying, we want the cash, but we don't trust the buyer to not run it into the ground.
Or they think the division is worth more than Lone Star is paying, and this is their way of getting a second bite.
That is extremely charitable of you.
I'm a charitable person.
You are famously not a charitable person.
Fair. But no, genuinely, that structure screams upside optionality. They want liquidity now. They want equity appreciation later. It's not crazy.
It's a little crazy.
Moving on. Victory Capital eating Janus Henderson for $8.6 billion, and I had to read about it in a footnote of a different story.
It got completely buried under the Paramount noise, which, by the way...
Oh, we're doing Paramount.
We're absolutely doing Paramount. Netflix bid, lost. Paramount overpaid specifically to keep a streaming competitor out of the Warner library.
That's the read everyone's running with, and I'm not sure I buy it.
Why not? It's perfect Hollywood villain logic.
Because Netflix has enough content. They don't need Warner's back catalog that badly. I think Netflix bid, got a real look at the books, and walked.
Oh, that's cold.
$170 billion is a lot of money to spend on a hunch about synergies.
You know what it reminds me of? Two people fighting over a restaurant check when neither of them really wanted the appetizers.
That's the best analogy you've ever done, actually.
I'm having a good day. Stick around. We're going deep on the valuation math right after this. Tomorrow's radar. Okay, so tomorrow, eyes on Paramount Warner. Antitrust filings, market reaction, all of it. $170 billion does not slide quietly through a regulatory review.
It doesn't slide through at all, maybe. That's my actual concern. The DOJ is going to have opinions.
Strong ones?
And separately, One Biopharmaceuticals. Watch for the shareholder vote timeline on that Servier deal. $2.5 billion in rare oncology and I wouldn't rule out a competing bid materializing.
You think someone swoops in?
Rare disease space, clean asset, cash deal. Someone's running the numbers right now.
Fair point. Also, Nuveen Schroders. Q4 2026 close is the official line, but integration planning announcements could drop any week. 2.5 trillion in combined assets under management doesn't organize itself.
That's a lot of spreadsheets.
So many spreadsheets. Anyway, before we wrap this one up, we need to talk about the one deal this week that almost nobody noticed.